All right, guys. Good morning. I hope you're all having a great night rest precisely. So today we'll be discussing on moving average, how to use it. That will be our major focus today. So let's see how it goes. Let's start. So I'm going to remove every other indicators on my chart so that we can start afresh. So I know that this video is going to serve as something like a refresher course. Why? Because I've actually made a video on something like this, but to make sure you guys are understanding what we've been discussing so far. So I'm going to break it down and we'll work together. So we're going to have a walkthrough on moving averages. So first, let's start. How do we apply moving average? So currently, I'm making use of Bybit's um, interface. So this interface is Bybit's interface. So it's been long I make use of trading view. And the reason behind me making use of Bybit is that I have more access to more indicators and more access to other things on Bybit platform. And there are some indicators that I cannot make use of it using trading view. And the reason I choose that is because I know that not everyone can afford the professional version of TradingView. So instead of getting the professional version, then why don't we use Bybit, where we have access to professional tools for free? All right, guys. So that is the first thing. So let's start by um let's have a walkthrough on how to apply moving average. All right. So the first thing is you come to your indicators. So you click on it, then you type EMA. So that is it, moving average exponential. The exact one we are using is moving average exponential. So you click on it. So automatically displays EMA 9. So this blue line is moving average. And currently it is displaying EMA 9. And like I explained in one of our video, in our previous video, I said that we'll be making use of EMA 15. So in order to set this up, you click on this EMA, you click on settings, you click on settings. So what's wrong with it? Yeah, all right. So the length, you change the length from 9 to 50. All right. So come to style. You can change it, increase the thickness of the line. All right. So that's all. And you can also change the line color here. So that's just it. Click on OK. So we have our 50 EMA here. So that is the first thing you've got to understand. So this to see. So this is your moving average. So let me say this. Let me say this. So I need you guys to understand that we never use this indicator and other indicators on their own for trade analysis or trade entries. So we don't use them on their own for trade analysis. And let me tell you one thing, I'm only trying my best to showcase these indicators one after the other. Then a time will come where I will make use of these indicators in just one trade. That might be very long or probably like an hour long video, which I'll drop very soon. So we'll use the indicators, candlestick, every other price actions to take a particular trade. So, and that might be the final class on trading. So, guys should stay tuned. So, let me move forward without wasting our time. Like I said, we don't use indicator or in this indicator or other indicators on their own for trade analysis or trade entries. So, whenever you want to enter a trade, don't use just indicators alone. So, and we only use them to confirm and support what we have already established with the price actions. And what does price action mean? As you can take a look at this trade, you can see that there is a clear downtrend. That is a price action. And taking a look at it around this place, you can see there is a clear uptrend. And remember, let me refresh your memory. Understand that a downtrend or probably an uptrend is made up of higher high and higher lows. Higher high, higher low. Break a little bit, then move high, higher low, higher high, higher low, higher high, higher low, then higher high. So all uptrends consist of higher highs and higher lows. While all this information I'm giving out, like I said, is just to remind you of what we've been discussing, because this I already even the last video I talked about it. So, and we have our downtrend consists of lower high and lower low. So this is after the break of this structure, the fact that the price of Bitcoin cannot really sustain Bitcoin cannot sustain its price above the previous high. You know, when it gets to the previous high, it tanks down, creating an equal high. Then from an equal high to a lower high, breaks down lower. I mean, sorry, to a lower low, breaks down, creates another low, create another lower low, create a lower low. So these are the price actions that you use to recognize the market trend or probably market shift. All right, guys. So what am I trying to say? Before you can make use of your indicators or probably this indicator, make sure you understand the market movement, the price action, and the market direction. All right. So now let's ask ourselves this question: why do we use moving averages? Why do we use moving averages? All right. So the one of the reason we use moving averages is that it can help us confirm if we are in a bullish trend or a bearish trend. Remember, whenever the price is above your EMA, so let me put it on daily time frame and put it on. All right. So this is it. Whenever your price is above your EMA, look at the price moving above the EMA. It signals that irrespective of what happens in the market, we are still in an uptrend. Take a look at this. When the price goes tries to break it, it pulls back up. Now the same thing applicable here. Tries to break in yesterday. There's a new day candle. It moves back up, trying to go up, and immediately you see that the price breaks below. What happened? We begin to look for a short signal. So it signifies that whenever the price is above our EMA, we are still in an uptrend. And whenever the price breaks below our EMA, we're back to a downtrend. So that is one of the things you need to put in mind whenever you want to make use of your moving average exponential, or in short, EMA. Secondly, it helps us to um, confirm if we are in a downtrend. So let me go back in time and let's see something on the, let's see, form of downtrend on the moving average or the upper bar moving average. So I don't really want to use this try and get something. All right, so let's use this. Take a look at the price over here. So the price, okay, so let's use this. All right, so let's use this. So you can see that when this price breaks below the EMA and it tries to break above what was rejected, what begins to happen? So the price begins to move from $42,000. It begins to move down, up until $15,000. So from $42,000 plus. But these are years ago. This 2023. But remember, we're trying to figure out the place of bearish price actions with the use of moving average. All right. So take a look at it. You can see that the price begins to move down from this level, keep on moving until it breaks the moving average around this level. And when it breaks the moving average at 17K, it begins to move up, tries to break it, then move up again. Serve as support here. It breaks it, move up again until it breaks it around this level. All right. So what am I trying to tell you is that it can also help to confirm the bearish candle. Likewise, one more thing, there is another thing we call sideways movement. Sideways movement um where the EMA is within, or the price action is reacting within the EMA. So this can probably be considered a sideways movement. So probably, but if we want to see more of sideways movement, we might have to use lower time frames. So we might have to use lower time frames. So let me go to something like 4 hours time frame and begin to. So because I think sideways movement took a few weeks ago in the market. It took us a few weeks ago. All right. So this can be an example of sideways movement. You see the price move on, not any real movement, moves up, comes down. So this can be an example of it, sideways movement. This can be an example of sideways movement. All right. So let me just give you a definition of sideways movement. So sideways movement simply means a scenario where price actions are moving within, it creates a range. They are moving within a range. So that is might be, give you an example, within the range of let me see, what's this? 97,000 to 94,000. All right. So that can be the range. So making use of lower time frame will give us a clearer perspective to what we're talking about. So you can take a look at it, begins to move within a particular range until we see it break to the upward, up the to the upside, then breaks below again. So these are some realities you've got to learn. And always understand the place of your what's the name? Place of your support and resistance. So like this now, I already placed this here. So whenever whatsoever cause Bitcoin, yeah. So whatsoever makes Bitcoin breaks below this this support level, whatever makes it breaks below this support level, then you can take a look at this on 4 hours time frame that it has broken below the moving average. Then and so in case you want to, okay, I don't want to talk about trade and trade right now. I just want to talk about the use of this moving average. So now you can see that's the, I just explained three use cases, and or you can make use of your moving average. First, I said it helps establish when the price action is in the bullish direction of the upward direction, probably, and secondly, when the price is in a bearish direction, and when the price is in a sideways movement. All right. So, secondly, we can talk about trend change. So, it also helps you to recognize trend changes in the market. Remember, let's. I think I already explained that, but I'll try as much as possible to do that all over again. So, all right. So, you consider the current price around this level. The moment the price breaks this level, let me expand it a little bit. Yeah. All right. So, the moment the price breaks below this moving average, take a look at it. Comes, it touch the moving average, and what happened? It breaks below, signaling a downtrend. Although the market is in the overall direction of the market is still an uptrend, But taking a look at this, is a downtrend. That is a short term direction. Sorry for that mispronunciation. A short term direction is a downtrend. So whenever you see something like this, the moment it breaks below it, then you wait for it to create. Remember that um a, that's a downtrend consists of lower high and lower low. And the moment it breaks to this level, it creates a low, breaks, it will test. And remember, this serves as um, a resistant. Then when it retest, what happens? It breaks to the downtrend. So that is from 64K to around 60K, losing $4,000. So this is what this guy serves as. So like I said, a breakthrough um, moving average can signal a trend change. So the moment it breaks to, it signals a short-term trend change, short-term bearish trend change. Sorry for the way I'm kind of. All right, it signals a short-term bearish trend change, and the moment it touch it, probably react to the trend line, you can take another short position. Remember the last time I talked about trend line. So in this scenario, there are some things you can actually do. So bring out your trend line, something like this. You can draw something like this. So the moment we have a break below your trend line, what are you trying? What's the market telling you? Market is telling you that we are in for a downtrend, and around this place your moving average confirms it. And what do you do at this level? Take a look at that other thing. There is this level here. There is another level here. So this will serve as your support level. So the moment the price breaks below this support level and it retest on the norms, I would have entered it at this moving average level. Remember I taught you something like this while we were having the enthusiast class. I taught you something like this, but I don't want to talk about. Okay, let me just talk about it. So I said, whenever you see that the market breaks below your EMA, probably on 30 minutes time frame. I think I use 30-minute time frame as an example. And you test the EMA. The next thing you want to do is to make sure you short it immediately. But let's take a look at this from a broader time frame, a bigger time frame. You see that these places, the price reacts to the level on multiple occasions, and the reactions signifies that, and a break below that support level signifies that the market is back to a downtrend. And take a look at it. The moment it breaks it, so you can enter on this level and still make some money. All right, we still make some money entering at this level, and take a look at it. It reacts to the same level again. After the reaction, what happened after the reaction? It comes down all over again until it creates a higher high at this level and begins to move up. So you could have drawn something like this around this level. Sorry, you could have drawn something like this. All right, take a look at it. After the break, it retest still on the EMA, and after retesting on the EMA, what happened to it? Pam, to the upside. So this is what the EMA does. So you trying your best to understand your EMA. That's why I intentionally make this video one after the other. The last video we made was on trend line, and today we are working on moving average exponential, that is EMA. So this is how you make use your EMA. So how do you make use of the EMA? First, remember I said it can be used for trend trading. Now, this is the example of the trend trading. The moment it breaks above, retest, you immediately know that we are going for an uptrend. Then push it to the upside, and you see something like this. Let's assume this is not a big deal, but if you enter this trade on a shorter time frame, it's a big deal. But on this longer time frame, it is not a big deal. So well, let's go for the big deal. Let's go for the big deal. All right, so here we are. You see, The moment it comes to this level, move to the upside, very sure that there should be a reaction, create multiple reactions, one, two, three, multiple reactions trying to break above the previous, which it could not. Then what happened after that? It breaks. And immediately you see that after the break, it tries everything possible to break this EMA. Then it acts as resistance. And when it resists it, it breaks from this level, touch the EMA again, 7 as resistance, touch it again, 7 as resistance until it comes down to this level. And when the market signals an hammer candle, what happened? Creates another momentum to the upside. So these are the things you got to understand. So you use it for trend trading and reversal trading. So these are the things I've just explained. So this is how you make use of your moving average exponential. So stay tuned for the next class. Do have a wonderful day ahead of you guys. Bye.